Hello, everyone. Welcome to today's Market Roundup, January 19th, 2023. This is Darren Fisher. So let's get started. So taking a look at market performance right here. We had the Dow down 0.7% along, in line with the spiders as well. NASDAQ and the Russell were down almost 1%. So that was a little bit interesting right there. We're getting definitely some movement to the downside here. Oil was up 1.25 and gold was up 1.37. So taking a look at the spiders here. Now this is a longer term chart. This goes out to January of 2022. So this is about a 13-month chart right here. And you can see I put it up there. This is something we discussed in the trading room several weeks ago. We're at a long-term trend line right here. And you can see every time we've hit that trend line, we've immediately fallen. Okay, we poked above it just about about the second week of December right there. But that was it. Then we came down and found some support at 300. Well, it looks like we've done the same thing. We've hit that long-term trend line again. Yesterday we had a hard reversal off of it down to the 50-period moving average, and today we went a little bit lower, and we're now below the 50-period moving average, but still above the 20. Really, what I think the market's telling us right here is the next stop is going to be at that 300 level again. And you see the same thing on the NASDAQ right here. Anytime we've approached or hit that trend line, we've had a hard reversal off of it. And we're in the same position in the NASDAQ that we are in the spiders right here. Yesterday, we went down to the 50-period moving average. Today, we're below it. It's still above the 20. I think for the what the markets are also telling us in the NASDAQ is, hey, next stop is that 260 level again. And that's been support since basically October. That 260 level. So I think that's really going to be the next stop. I think the reward risk is to the downside right here over the next couple of weeks. And you can see on the heat map right there, technology didn't do too poorly in all, but you can see semiconductors there took some serious hits. And we're looking at industrials as well. A lot of movement in the industrials. That had been a strong sector for us. But it looks like a lot of the institutional money is going out of that right now. Consumer took a hit as well. What held up, surprisingly, was communication services, energy, and healthcare. There were some red names in healthcare, but not a whole lot. So these are where the strength is right now on a broad market sell-off. So taking a look at the market outlook, I think weekly, you just have to say, this week is toast. If you're on the bullish side, it's already been there. Got a -3 for the week. Technically, on a monthly outlook, we're back down to a 0. We're above the 20, below the 50, and that slope is mixed right there. So, that's a 0 right away. Just not a whole lot. Like I said, I think the reward risk is to the downside, at least to that 300 level right there, and then we're going to have to reevaluate. Some potential trades on the bullish side. We've got Spotify, NetEase, Hayward, Delta Airlines not looking too bad. Some neutral trades, KIM, Cube, CTRA, PSX, that's Phillips 66. And some bearish trades, RVIN, AMCR, ENPH, and Bill. So let's take a look at a couple of these charts. This is Spotify right here. And you can see, despite what the market's been doing this week, Spotify's up. We had some support there at the 70 level. It held out at base for a long time right there, and then right at the beginning of January, it broke above that 50-period moving average, and it's just been marching up at a pretty sedate rate for the last really month, and so that's still looking pretty good. So if you're looking for something bullish, I would take a look there. And this one's Hayward. You can see this has had a nice high base, sitting right there about the 1250 level. This looks like might want to break out. This is going to be one of the stocks that if I was looking for something bullish in my portfolio, I'd probably be looking at a diagonal call spread. Give yourself a little bit of time. If it's got 50-cent strikes, then you're perfectly positioned right there. If it doesn't, it's probably got dollar strikes, and you can just go long the 12, short the 13, and take it. Now tomorrow, being Friday, you're only going to get one day out of there. That's fine. If you put it on in the morning, you can see which way it goes, and you can hold it over, that long call, hold over to the next week, and write another diagonal call spread on it as well. On the bear side, you can see Rivian right here, RIVN. It's just been in a low base. It's been weaker than the rest of the market. We're below the 50 and the 20 itself. And today it looks like we're breaking, just starting to break below support, at that $16 level. It closed at $15.79. So this looks like it wants to go down. I mean, this would be an easy play, down to 14. Give it a couple of weeks to hold out right there. But this one looks like it's just breaking down out of that low base. Different situation here in end phase, ENPH. Okay, we had a little bit of weakness, bounced right off the 20-period moving average at about the $260 level yesterday. And today, must have been news, must have been earnings. Really doesn't matter. We gapped down, tried to make a bit of a run and hold at the 250, but we just went through and broke support. I mean, this thing went, it was down almost 11% in a day, broke support at about the 225 level. It closed at 223. So this one just looks like it wants to go down. If you want something a little bit longer term, then on the bearish side, then I'd say ENPH is the one to take a look at. This looks like it's having a pretty good first part of the movement to the downside, and you could ride this for quite a while, it looks like. So tomorrow's outlook, like I said, we had a hard reversal off the long-term trend line. I think we do get some follow-through right there. With the reward risk being to the downside right there, I don't see a lot of managers wanting to hold into the weekend. So I think we're going to see some more selling right there. As far as economic reports go, tomorrow we've got existing home sales. I don't expect that to have any effect itself on the market. Some people might blame existing home sales on it, but I really don't think. I think it's just finding a reason for why the market's selling off. So that's what my outlook is. Earnings, don't have a whole lot of earnings tomorrow. We've got Schlumberger, then Allied Bank as well. HBAN is a regional bank. No real huge market movers right there. Schlumberger might be something, but the earnings are a little bit light on the downside. Well, that wraps it up. Thank you very much for your time, and hope to see you again. Thank you.